Saturday, April 17th, 2021, Monaco 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank all the viewers, all the subscribers, all the new people that are interested in the channel. It's continuing to grow. Yes, it has been a gradual growth. It has picked up in the last 12 to 18 months. We're almost at 50,000 subscribers. Even though that's not something I set goals for, I just try to make the best content I can for the people out there. I'd like to thank also those who contribute to the channel through PayPal, through Patreon. How does the Patreon work? I don't make special videos for Patreon. All it does, if you contribute $1 or more, is that you can contact me directly and I will answer your questions. And I try to answer most questions on the comment section. It is difficult sometimes to answer all the questions because I'm getting more and more feedback and more people watching. I like to say as well that I saw a couple of days ago the impersonator or the scammer come back on the channel on the comment section. This person came back as Monaco68. I deleted that. I reported that. Then he came back as Monaco64, a new one. I saw that his channel was created on the 14th of April. I reported that too. If you find a comment that seems out of character to my comments and it has my thumbnail, click on that. Monaco 68 or 64, click on that. And if you go, when you go to this impersonator's YouTube channel, you see that he has no subscribers and no viewers, and maybe you can click on that little flag as well and report them too. For me, that would help. I was deleting messages for about 20 minutes the other day, so it is a nuisance, but that's the way it is. And I like to thank also people who buy a few products once in a while in the Teespring store. We've got End the Fed mugs, we got Billy t-shirts, and a few other things. And for my UK viewers who have an interest in gold and silver, I've always told them to look around, shop around for the best price from the most reputable dealers possible. The other thing nowadays that you need to check on is to see if the dealers really have the gold and silver to ship right away. And I've also developed a relationship with Gold Investments where I have a promo code, so you can go to them too if you'd like. That's who I've been using for almost 20 years, family-run business, and they will sell you only what they have, only if they have gold and silver coins or bars, and they will ship it next day, probably 2 days at the latest. The promo code there is Monaco 64. Get a small discount off the offer price. And Oliver and Simon have told me as well that they will try to match any other price from any other dealer in the UK. So if you see that their price might not be as good as let's say another price from another dealer, give them a call and see if they can match it. And usually when they show that they have something, they do. It's not going to take a week or two to get it. So let's get to the subject of the day. And the subject of the day is a part 2 of a video I made about 2 weeks ago. It was entitled, Have Gold and Silver Finally Hammered Out a Bottom? That's going to be now part 1. You can watch that if you want to know what I talked about back then, and it's fairly similar to what I'm going to talk about today, but I'm not going to go into details about the candlesticks because I did that in the first video. If you want to know more about the Japanese candlestick charting and technical analysis, yeah, go to part 1. So yes, gold and silver I asked the question. Yeah, it was April 2nd whether they had hammered a bottom, and I think they have, and they're continuing to confirm that. So we're going to look at the charts. And before I go further, I'd like to say, yes, I love technical analysis. When I worked in the city as a futures and options broker, I used a lot of technical analysis. And a lot of clients like the technical analysis. But I also look at the fundamentals. And what are the fundamentals? Well, the fundamentals are that we've been seeing central banks, especially the Federal Reserve, the US dollar, basically be inflated out of thin air ad infinitum. Since August 15th, 1971, there has been no anchor in the monetary system, and it's getting worse. And why is it getting worse? Because once you go down the path of inflation, the only way to stop the inflation, there's only two ways. One is to stop the inflation and implode the whole system and have riots, revolutions. Not that we're not having that already. The other way is just to keep inflating until the currency collapses, and I think we're on the path to the latter, and that's why I'm holding on to my precious metals, gold and silver. And yes, I'm going to look at the technicals. Over the long term, I would say is pretty irrelevant, the technicals for gold and silver. And you might think, what are you talking about? Well, because if you look at countries where you had hyperinflation, eventually you couldn't get metal with the paper, with the Venezuelan bolivar or the Reichsmark during Weimar Germany. You couldn't get anything. You couldn't buy gold. People wouldn't let their gold or silver or anything for that matter go for that paper currency. But right now, I think we're still lucky enough that we can exchange fiat currency for real money, gold and silver. Yes, when will be the moment when things really get out of hand? And by that I mean, when will the dollar and all the other fiat currencies basically start sinking really quickly to the bottom versus precious metals and all other hard assets? That's difficult to tell, but I think once it starts, we will probably know when that is happening, I would say. It will be when the bullion banks, the central banks and governments lose control of commodity prices, lose control of interest rates and bond prices. So as I've talked about how we've had 50 years of inflation and since August 15th, 1971. And for those of you out there who think gold and silver are useless, that Bitcoin, cryptocurrencies, and other things now have replaced gold, I wanted to show you this chart of how well gold in particular has performed. I think it was on a Sunday evening, and they interrupted Bonanza, which I used to like watching when I was a kid, Bonanza, and Nixon made his comment that he was going to suspend temporarily the convertibility of the American dollar to gold, right? It's been over 50 years. And yes, we can convert Federal Reserve notes to gold or Bank of England notes, but it's not at a fixed rate of $35 because basically it was a default, and we've been defaulting since then because the less gold you can get for your currency, the more default there is, the more inflation there is, the more cost of living goes up, the more inequality there is. So here's a chart. It's a logarithmic chart of gold, and it's a monthly chart going back to March 1970. And at the time, of course, gold was fixed at $35 an ounce. So you can see that it hasn't been a smooth ride, but the trend is definitely from the bottom left hand side of the chart to the top right hand side, and that's going to continue. So as you can see here, we've had this correction since last year, September, August, September time. It has felt painful, but in the bigger picture, in the bigger scheme of things, you can see that this is just a little blip. And looking at this chart, this year, if we get to like 2,500 in the gold price, there should be big resistance there, because that's where that trend line is, the top trend line, which takes the high from 1980 and the high from 2011. So that's like the red line, the Maginot line. I think that line will be watched very closely by the monetary powers that be. If we break through that line, I'm not saying it's going to do it this year, maybe next year or the year after, we could be in a scenario that I spoke earlier in this video, where they lose control, and no one will want to exchange gold for paper money. They'll exchange it for other things that are useful to surviving and leading a normal life. So that's the long-term chart. So I spoke about the hammer candle formation, and I noted how we had a hammer candle formation, as you can see here, at the end of March last year, just before the market resumed its move. We had a big drop, of course, from the beginning of March till the end of March, when everything imploded last year because of the pandemic. Gold went from 1,700 to about 1,450. And then after that hammer, it just went straight up almost. And we got up to 2,075. So I was looking at it, at this chart 2 weeks ago, and I noted that we had a hammer formation. And I said, that's when I made the video where I asked the question, have gold and silver finally hammered out a bottom? And why silver? Well, because they will both follow each other. And even though we haven't really seen a similar formation in silver, and lo and behold, we've had 2 weeks of new highs. And as you see, this week as well, it was a very good week. We got up to a high of, I think it was 1784 in the spot. This chart says 1782. And also important is the low from the end of November last year. That was, let's see, at 1766. I remember, yeah, very well. Earlier this year, that was a level people were looking at. And when we broke that level, of course, gold really dumped and went even below 1,700. Made that double bottom around 1675. And but more importantly, we're back above that 1766 because we closed around 1776 yesterday. Of course, that's going to be probably tested again, but I would say it's looking pretty good right now, even though nothing is certain in the world. Short term, a lot of things could happen, but the longer term picture, as you saw earlier, is still very, very constructive. Not only technically, but also fundamentally, I would say. I think 1800 as well, or just below 1800, is a key level on a longer term basis. If you look back in 2010, 2011, 2012, that was a key level there as well. Silver, the technical picture for silver. First, let's look at the longer term chart for silver. I think many of you have seen this huge generational teacup formation, and you can see why the 50 level is so important. I think the back and forth we've had in silver since last year and since the beginning of February, when you look at this chart, is just a very little blip. It looks like silver really wants to explode from here, and that 30 level, of course, is going to be the line in the sand, the Maginot line. And once we get through 30, I think we'll be up to 50 very quickly. And some people have said that 50 is just the beginning, and I agree. To finish off, let's just look at a more shorter term weekly chart. And I've done this Fibonacci retracement here from the low last year, just below 12, to the high back in August last year, just below 30. I took that one instead of the high we had in beginning of February at 30.10, because that was overnight trades. There's a lot of enthusiasm. Not that that's not good, but it's pretty much the same level, 30, for all intents and purposes. And I would say that this is very, very bullish, because we weren't even able to retest the 61.8% retracement, which is a Fibonacci retracement. If we did, we would have had to go below 21. And we went nowhere close to that level. Yeah, they managed to get it below 24 for a little bit at the end of March, but yesterday wasn't a great day for silver. At the end of the day, they took it down to around 26 at the close. So we didn't close near the highs, which I think was 26.30. But I think this shows that there's a lot of underlying strength for silver. And that's why I think there's a silver shortage out there, because they're suppressing the paper price and it doesn't really reflect the real price. And that's why I think when we go through 30, the bullion banks are going to have to surrender to allow the real price to be reflected in silver. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.